How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for May 8th, 2018. Here's a snapshot of the positions the institutions were holding as of May 8th. And let's get into examining gold. So what do we see here in gold? So, as we were speaking last week, we saw a decline in long positions, right? They used to be at a positive 305,000 positions long here. They started closing off those long positions. And then we saw a slight increase in longs as price was being pushed up to the highs again. And ever since then, we are seeing a decline since March 27th. 234, 234, 237, 225, 209, and now 198,000. Okay, so 198,000 positions, and that includes this candle here. So massive profits being taken on the long positions, essentially dropping them from 305,000 to 198,000. So about 100,000 positions long being closed out. So excuse me. So what do we also see here? We also see that, since that initial time that price came up to these highs, short positions were in the 90s, and fast forward to now, and they are still in the 90s. Okay, longs closed out by 100,000, and shorts pretty much remain in the 90s at the end of the day, when everything is all said and done. Okay. Now there's a reason why this is happening, and we will go into more detail on a future webinar to explain why this is like this. We can see that during the process they have dropped their short positions from 90 to 60. The lowest was 61,000 here, right? Or actually here 55,000, and then they bumped it back up to these highs. So right now what we can tell by looking at the institutional positions is this: longs are no longer aggressive, and shorts have started to become more aggressive. Okay, longs are below average size of 235, and shorts are above average size of 75,000. If you look at the coloration of the cells here, you can see that they're slightly bearish, neutral turning bearish, but net positions is a positive 107,000. So overall, obviously the sentiment is bullish, but we can see that short term we're getting a lot more bearishness coming in. Okay, and that is supporting the move to the downside that we've been expecting for quite some time, which is great because I want to see a momentum shifting here. And then I'll be interested in getting in long, because that's what I believe is going to happen here. But I'm going to wait for that proof before I make a move first. Okay, so what do we take? Why don't we take a look at oil? What do we see here? We see that the long positions have slowly declined over the last few weeks. 849, 838, 815, now 804. And that's as price was consolidating here on the weekly. But you could tell that they're in preparation for closing off longs. Now, with the amount of long positions that they have in relation to the amount of short positions that they have, they're going to have to start taking profits on those long positions soon. So it looks like this is an early indication that could potentially be in the beginning phases right now. I've mentioned that right now price is in a weekly imbalance, and above that is a weekly supply zone that is actually nested with this descending trend line on the higher time frame. So I think there's a very good chance that this weekly imbalance gets taken out for price to head even higher, so that it respects the weekly supply zone right here. And that is where we're going to see massive profit taking on the long positions on oil. And in that, it will present itself with a nice shorting opportunity. Okay, there's lots of room for price to drop, but that will take some time for that to set up. So let's take a look at the US dollar. What do we see? We see that institutions increased longs from 24,000 to 26,000, and they left shorts at 26,000. Okay, but bottom line is longs are above average size, okay, and shorts are above average size as well. So why are shorts still above average size? Well, I'm with the belief that we're going to see a drop in price before a bigger move to the upside. And why is there a shift in longs? Well, because I think we're going to see a bigger move to the upside. So obviously, if a big move to the upside was about to be formed, we'd want to see the institutions shifting their bias from long to short. And that's why I created this 13-period average and put it into my template, because I noticed that it was a good indication of momentum shifting. Okay, not only can we see it on the charts that momentum is shifting, but we get early signs of that momentum shifting just by looking at their positions and how they are shifting them. Okay, let's look at the Aussie. So what do we see here? We see that the institutions are somewhat aggressive with their long positions, but they are a lot more aggressive with their short positions, right? So shorts are way above average and longs are above average. So we got a drop right into this weekly area of demand, still nested within the monthly imbalance, and we're getting a slight push to the upside. All right, so taking a look at the coloration of the cells here, we can see that they're still somewhat neutral with a slight tinge of bearishness in there. Net positions is a negative 16,000. So not really good to trade right now. We have the underside of this trend line that we would have to contend with if we were thinking about going long. And we also have this weekly area of supply sitting right here. So I suspect that if a move comes up like this and hits this area of supply, we'll see a further drop. Okay, let's take a look at the USCAD. What do we see? So we see that the institutions have been increasing their long positions from 48 to 53 and now 57,000 positions long. So they're starting to become more aggressive with their longs. And you look at the shorts, they are cooled off, pretty much cooled off, right? But over the last couple weeks, they've been increasing their positions from 23 to 25, now to 33,000. So I've been waiting for a further drop to about this area, where I said that I'd be interested in getting long. Price is stalling from dropping all the way down there, but I still am waiting to see if that's going to happen. We would need that US dollar drop to really come through for us to see this price here start to decline. So waiting to see if that is indeed what's going to happen. I'd like to see that happen because it's a great opportunity to get in long here. Okay, nested within demand and make a move to the upside like that, but waiting patiently to see if indeed that is going to play out. US dollar Swiss franc, so we have a test of a weekly supply zone, which is setting up for a nice move to the downside. Okay, that could definitely play out. But again, with this chart, we also need the US dollar to play along and to drop. So what we can tell here is that the institutions are aggressively long, increasing their long exposure from 48,000 to 58,000, and slightly decreasing their shorts. But I'm not too concerned about that. Sentiment is bullish. We all know that price is going to go up higher. That is what I've been forecasting for quite some time. And we can see that they increased their net positions from positive 19,000 to a positive 32,000. So just wanting this drop because we can't buy right here. It's just not a good time to be buying. We're nested in the supply zone, so this is not a good time to be buying. The perfect place to be buying is down here where they added 6,000 positions long. So waiting to see if indeed the US dollar will drop to cause this drop here to give me an opportunity to get in long on this pair. Euro US dollar. So what do we see here? We see that longs increase from 221,000 to 226,000, and they're also increasing shorts. So is this in preparation for a move to the upside? I'm waiting for that. That's what I'd like to see. We can see that the sentiment being held by the institutions is still a bullish sentiment. Okay, 68% of their overall exposure is geared to the long side, and we can also see that net positions is still sitting at a positive 120,000. So still bullish bias. Okay, still bullish bias. But I'm expecting a bigger move to the downside like this. So waiting for that push to the upside, where I'll be waiting for momentum to shift here for me to ride this to the downside. So just being patient with that one as well. And so what do we see on the pound US dollar? So back in mid-April, they were extremely aggressive with their long positions, and since then, boom, 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 down to 62,000, causing this big drop in price. And when we look at the shorts, we don't see them really increasing their shorts. So the big cause of this drop was from profit taking on longs. So just as with the euro, I'd like to see a push to the upside, where I'll be interested in getting in short here for a bigger drop that I believe is to come. But again, just with the euro, the sentiment still shows bullishness, but that's simply because 62,000 positions, 53,000 positions, and based on previous positions, this is still considered to be a bullish stance. But we all know the momentum has shifted on the weekly chart, and we're just waiting and being patient for the map to be created. So therefore we know exactly what the institutions are up to, and then we can take advantage of exactly what it is that they're up to. Okay, US dollar, Japanese yen. So we got that push from up here. Now we're testing the bottom of that trend line, and I'm assuming what's going to happen is price is going to stall out here or test the trend line, and then we're going to see a move to the downside like that. And if we look at longs, they're very cooled off, and if you look at shorts, they're somewhat aggressive. So this helps support the fact that there could be that drop that I'm expecting to the downside. But again, waiting for the map to be drawn out by the banks. Once they create the map, then I know exactly what they're doing, and then I know exactly where I can participate in the markets with them. Kiwi dollar, what do we see? So price broke down through this area of demand, but we're still sitting within this questionable monthly area of demand. So I still expect price to drop even lower here. And so with that being said, we can see that they are somewhat aggressive with their short positions. And we can see that with their long positions. And we can see that with their short positions, they have cooled off. Okay, shorts are below average, just as well as the longs. So if price is about to eventually go lower like this, what would the institutions have to do? So they have been very long biased, right? They brought price all the way up to these highs to test this area of supply, and then we saw a drop in price, and now we're hitting what is a very questionable monthly area of demand. So first things first is this area to have to be taken out for me to be really excited about taking any shorts here, and we'd have to see a bigger shift. Okay, so we're starting to see a big decline in long positions from 47 to 39 down to 29, so that's a good sign. And that's as price was dropping, so they're profit taking on longs, but not so much move on shorts, except for this past week they added about 3,000 to their short positions. So I still think that there's going to be a push somewhat to the upside. Where is it going to stall? It's hard to say. But I think eventually what's going to happen is we're going to see a bigger move to the downside like that. Okay, so that's it. There's nothing really on the agenda this week in terms of volatility, so I will just be waiting patiently. Now is not the time to be taking any trades in the markets, because price is overextended. Banks are making moves. They are in the process of creating the maps for us, so we can't try to assume we know what's going to happen, because assuming we know what's going to happen is going to cost us money. So we have to wait for the maps to be created, wait for retracements to take place, and once that has taken place, then we'll have a very clear picture as to what is the next move that the banks are going to make. And then we can jump on board and ride their coattails. All right? And so have yourself a great week, and we'll see you in the markets. Take care.